Hello and welcome to Markets View at Deven Choksey, your daily market podcast where we decode the Indian financial markets. Wednesday morning, and let's start with the global cues and understand how the impact is looking like for the domestic market. To start with Gift Nifty, while the Gift Nifty is trading higher, indicating a start in the green for the Indian markets. Also, don't forget the action we did witness in the yesterday's session for the domestic market. Taking the cues from the other global markets, the US futures are higher after cash market ended in a red note on Tuesday. US markets ended lower where S&P and Nasdaq snapped 5-day winning streak. Nvidia slides 1% in extended trading once China export restrictions could hurt quarter 4. Talking about the European markets, the European markets closed with minor cuts yesterday afternoon while FTSE was down around 0.2%. Again, US 10-year bond yield is steady at 4% as traders assess latest Fed minutes. Crude, however, is hovering around $82 a barrel amid caution ahead of OPEC plus meet. So clearly, again, if we have a look at the Asian markets, they are also largely trading lower in early trade, while Nikkei is trading with an up move of around 0.5%. So clearly, the market setup, the global setup for this session looks a slight on a weaker side. However, Gift Nifty is trying to support the domestic market, but the lower opening of the Asian markets and the flat close of the US market yesterday is to be considered as a concern and a challenge for the domestic markets going ahead. So in brief, to sum it all, the Asian markets are lower. Gift Nifty is indicating a positive start for domestic market. US markets did not witness good shine in the yesterday's session. US 10-year bond yield is trading at around 4.4. The energy pack is trading with gains and at present at around $82 a barrel. And talking about the economic indicative action, the most important triggers which one needs to consider, the US existing home sales contracted in October and FOMC minutes. Yes, the FOMC Fed minutes, which were of utmost importance, and we were discussing the same since yesterday that this minutes will be in focus. The FOMC minutes did make it sound like hikes at present are over. To make it a bit in detail, if we have a look at the FOMC minutes brief, while all participants judged at appropriate to maintain interest rate at 5.25 to 5.5%, maintaining restrictive stance would support further progress towards goal is what was mentioned in the minutes. The need to see more data indicating inflation pressures were abating. Saw a labor market conditions as tight but had eased since earlier this year. And all the participants agreed to proceed carefully on interest rates move. Policy decisions will be based on totality of incoming information. So clearly, these are the FOMC minutes brief which one needs to consider. All in all, one can say that the FOMC minutes made it sound like the hikes are over. So this is how the global setup, the economic indicative action and the global trigger looks like. It can be a volatile day today for the domestic market as the global market are not supporting as much as they should. So let's now understand how the impact of these global factors, triggers will impact the domestic market. Let us understand the trade setup for today, that is the Wednesday session. Taking the cues from yesterday's close, the formation of frequent upper shadows on the daily candles near 19,800 to 19,900 zone indicates the presence of strong overhead resistance on the higher side, while the 19,600 level continued to act as a strong support. Hence, given the strong support zone, the Nifty 50 seems to be trying hard to surpass the 19,800 to 19,900 zone. And if the said zone gets broken, then the 20,000 to 20,200 zone will be the area to watch out for. In the yesterday's session on November 21st, the benchmark indices recouped all their losses from the previous 2 days. The Sensex rose around 276 points to close at 65,931, while Nifty advanced around 90 points to close at 19,783 and formed a bullish pattern. The opening upside gap remained unfilled. At the same time, Nifty is not showing any significant reversal pattern at the highs or not showing any sharp weakness from near the hurdle. This is a positive indication. Again, Nifty continues to stay range bound. The present consolidation pattern could eventually result in a decisive upside breakout of the hurdle at 19,900 levels from here on from slightly lower levels. The anticipated upside breakout could pull Nifty towards new all-time highs. Immediate support is at 19,650. Well, the market breadth was slightly in favor of bulls as 1,144 shares advanced against 964 declining shares on the NSE. Though the broader markets remain mixed, with Nifty mid-cap and small-cap indices showing some signs of positivity. So considering all of these, let us now take a look at what will be the key support and resistance levels for both Nifty and Bank Nifty today. For Nifty, it might take support at 19,760 followed by 19,743 and 19,714. On the higher side, 19,818 can be an immediate resistance followed by 19,835 and 19,864. Talking about Bank Nifty, well, yesterday the Bank Nifty also closed higher after a range-bound session with a positive bias, rising 104 points to close at 43,689. But there was a bearish pattern also seen in Bank Nifty, as we did see a lot of volatility in the last week as well. Intraday witnessed a dip, however, it was bought, indicating buying interest at lower levels. We expect the pullback to continue till 44,000 to 44,050 from a short-term perspective. The structure will become weak below 43,400 level. If we have a look at the index is expected to take support at 43,611 level, followed by 43,562 and 43,484. While on the upside, the initial resistance is seen at 43,761, then at 43,815 and 43,893. Let us now take a look at what are the stock-specific news which will be in focus for today. Talking about Maruti Suzuki, the automobile major said the board of directors will be meeting on 24th November to consider the allotment of equity shares of the company to Suzuki Motor Corporation on a preferential basis. So a board meet which will keep Maruti Suzuki in focus for the next 2 days. Titan is again in focus as Competition Commission of India, CCI, has approved the acquisition of an additional 27% shareholding in Carrot Lane Trading by Titan Company. Titan will acquire an additional shareholding in Carrot Lane from Mithun Padam Sacheti, Siddhartha Padam Sacheti and Padam Chand Sacheti. Wipro is another stock which will be in focus as the technology services and consulting company announced a collaboration with NVIDIA to help healthcare companies accelerate the adoption of generative artificial intelligence through AI-driven strategies, products and services. Another stock which will be in focus is Tata Consultancy Services, as in the EPIC System Corporation matter, the United States Supreme Court has rejected TCS petition to file an appeal against the orders passed by the US Court of Appeal 7th Circuit. The court order has confirmed the punitive damages award of $140 million passed by the District Court of Wisconsin. With this, the company intends to make the balance provision of approximately $125 million in its financial statement as an exceptional item for the third quarter and 9 months ending December 2023. The next stock in focus is Bank of Baroda, as Life Insurance Corporation of India has increased its stake in the public sector bank to a 5%. LIC bought 24 lakh shares in the bank, taking the total stake to 5% against 4.9% earlier. And last but not the least, Texmaco Rail and Engineering will be in focus as the company launched its Qualified Institutional Placement QIP issue on the 21st of November. The floor price for the issue has been fixed at 139.9 per piece. Let us now take a look at the FIs and DIs data. The foreign institutional investors net offloaded shares worth 455 crore, while domestic institutional investors bought shares worth 721 crore on November 21st. So this is how the trade setup for today's session looks like. Keep a watch on all the levels. Of course, the broader market indices did show some signs of positivity. However, Nifty and Sensex also did close with a positive up move yesterday. Bank Nifty is witnessing volatility, and we need to see and watch out for the important levels like we just discussed. With this, we come to the wrap of the podcast for today. To sum it up, market is volatile. There are a lot of economic indicative action we need to consider. Nevertheless, irrespective of market conditions, research is the backbone of successful portfolio creation. Wealth creation is an art that we understand. We at Deven Choksey have our exclusive research services which are powerful and successful. To avail our exclusive research services, we invite you to join us. Just click on the link below and you are done. Fill in your basic details and our team will reach out to you. So don't wait any further and embark on a wealth building adventure together. Thank you and have a nice day.